$500 million. That's what the jackpot of tonight's multi-state lottery known as Powerball is up to. Normally, we don't report on such games of chance, but it's awfully hard to ignore a potential $550 million windfall. From people waiting in line for hours in Arizona, to laying down $20 in North Dakota for a chance to win, to dreaming in Miami.
I would take that $500 million, and I would only get $250 million. Then I'd have to pay the taxes. You put you in a 50% tax bracket, and means I would get $125 million free and clear, which is my money. I would invest some of it in the stock market. I'd donate some of it to the churches.
I would take a lump sum.
Why would you take a lump sum?
Because I don't know how long I'm going to live.
We spoke with Susan Bradley, founder of the Sudden Money Institute and a certified financial planner. Susan, thanks for joining us. When sudden wealth like a lottery win or an inheritance, selling a company, or God forbid a sudden death in the family comes, how do you make that decision between taking a lump sum or stretching out the payments over several years?
You take a lot of time before you get to that decision. It's certainly not your first decision. Your first thing to do is change management. And we do a triage just to see what is most important, and we deal with urgent things first that are really going to affect well-being. Usually the lump sum versus payments is something that you can put off for at least a month or two.
Are we culturally biased to take the money and run now compared to wait, say, a generation to collect?
You know, I think that used to be the very strong bias until about 2008.
Yeah.
And then there was a sense that the investment markets were not so safe. So some people tend to go more towards the payments. Neither one is good or bad. They both have their complexities.
Yeah, one of the risks, obviously, of those payments is either you may outlive the payments, not likely the case if you're winning $500 million in lottery, but you may die before you're able to collect all those payments.
Well, in both of them, you need to really have somebody working with you that knows the planning of that. If you're young enough, 30-year payment, you know, you could outlive that, so you need to create a replacement fund. Rule of thumb is kind of you spend half of the after-tax money and save the other half so you can replace. And the other, if you happen to get hit by a bus, you may be leaving a nightmare of estate planning problems.
Yeah, for your heirs. We should point out it's not just lottery lump sums. It can be retirement, it can be a pension payout. But I do have to ask you about the Powerball as we look at it by the numbers. 42 states involved. Odds of winning 1 in 175 million. You have better than 200 times better odds to actually get struck by lightning. Do you buy a ticket?
No, I didn't buy
You
a
don't
ticket.
buy a ticket?
I randomly buy my father's football numbers because that's important to him, but no, I didn't buy a ticket.
Oh, you know sudden wealth like nobody else. Susan, thank you so much.
Pleasure.
Susan Bradley along with us, the founder of the Sudden Money Institute.